In the wise words of Benjamin Franklin, nothing is certain in life except for death and taxes.
The fun part of investing is making money. The bad part, paying taxes.
In this video, we're going to be talking about capital gains tax in Ireland, how to go about paying it, filing it, and everything else you need to know. I'm Steve.
I'm Cian.
And this is the Learnings Report, a show where we make investing accessible and understandable for everyone. So what is capital gains tax? Capital gains tax is the tax that you pay when you dispose of an asset. When we say that, we're usually talking about selling some stocks, some shares, some cryptocurrency, and a couple of other things.
So right now, on the 5th of March 2021, the capital gains tax in Ireland is 33%.
Boo!
Not great.
Do you have to pay capital gains tax in Ireland? If you make money selling your shares, your cryptocurrency, options, you will have to pay capital gains tax on those investments. As Cian sadly already mentioned, at the time of recording, capital gains tax in Ireland is 33%. The good news is, however, you only have to pay capital gains tax on the gain or the profit you make on the investment. So in other words, only the money that you make on your investment, excluding the principal or the initial amount that you invested yourself. Let's take an example.
So, say for example, you invest 4,000 euros into some shares, and congrats to you, this investment grows to 10,000 euros. Your gain in this case is 6,000 euros, so you would pay 2,000 euros in CGT, which is 33% of the gain, there or thereabouts. The second piece of good news is that the first 1,270 euro of your gain or gains is exempt from capital gains tax. So, if we return to our previous example, we're actually going to have to make some corrections here. So our initial gain was 6,000 euro, but as I just said, the first 1,270 euro is exempt from this. So we can take that away from the 6,000 euro and we end up with 4,730 euro. This is now the new number, or our new tax chargeable gain, that we can calculate our CGT amount due on. So we multiply 4,730 by 33%, and our tax due is 1,561 euros, which is slightly better than the 2,000 euros we had in the example without the exemption.
Certain things are exempt from capital gain tax, such as betting,
Lottery wins,
prize bonds,
private motor cars,
and a couple other things, and we'll link the full list in the description below.
So, how do I pay and file CGT in Ireland?
They happen at different times. The first is when you pay it, and then after is when you file it. And we're going to give you a little bit more examples of that. Paying capital gains tax is the more urgent of the two. If you make a sale between the 1st of January and the 30th of November, capital gains tax is due to be paid by no later than the 15th of December of the same year. The only exception to this rule is if you sell any shares within the month of December itself. In this case, you would pay tax on those shares in the following year by January 31st.
The reason Revenue does this is that they want to collect the majority of tax receipts before the end of the year. This is why the deadline for the first 11 months is in December. So, if we take the 6,000 example that we had earlier, and if this 6,000 was a gain made in June, we would then have to pay the 1,561 to Revenue by the 15th of December. If we made the 6,000 gain in December, however, we would have to pay the 1,561 by the 31st of January in the following year.
So how do you actually pay capital gains tax? We're going to show you. So in order to pay your capital gains tax, you need to log in to your My Revenue account on revenue.ie. An important clarification though is just because you have an account on revenue.ie does not mean that you can automatically pay your capital gains tax. You'll first need to create an ROS or ROS account via your existing revenue account. So registering for ROS is a pretty straightforward process. Simply go onto revenue.ie, sign into your My Account page, scroll down all the way to Register for ROS, click. On this screen, you'll have your details if they're already uploaded onto My Account, and if not, you can add them yourself. Decide whether you want to receive your system password via text or email. For me, I'm going to opt in for email. Then simply check your email for the code that you receive and come back here to add it into the password system. Scroll through all these terms and conditions, accept them if you're happy with them. For this, you can download and save your digital certificate. Personally, I'm applying it as an individual, but of course, if yours is anywhere different, feel free to click that option. Choose CGT as your option. Add in your tax registration number. For most people, this is going to be your PPS number. Click next. And then here, when you download and save your digital certificate, you will just be asked for the system password that you should have received by email or text. Proceed through the following steps and that will complete the process. Once you are confirmed and logged in on your new ROS account, you will then be able to submit a payment for your capital gains tax. And we're going to show you exactly how you can do that.
So in order to pay the capital gains tax, you first sign into your ROS account. You have your PPS number and just put in your password. And then once you get to this screen, you then scroll down and click Submit a Payment. Select a payment type, which is a tax payment or a declaration. And then the tax type is capital gains tax. And then you click through to make the payment. So you have to then choose the period for which you made the capital gain. So as we've described, if you made the gain in the first 11 months, for example in 2020 here, you would click this box, which is between the 1st of January and the 30th of November. Or if you made the gain in December, you would click this period of the 1st of December 2020 to the 31st of December 2020. So let's say hypothetically we made this gain in the first 11 months of the year. So you basically have to select what type of payment you want. So in this case, let's say card payment. I won't go through it now, but you can fill out all your card details here. And just to clarify here, the number that you pay is the gain that we calculated. So in our previous example, this was the €1,561. So then when you click through in the process, you should get charged for your card and finally submit your payment for capital gains.
So once you've paid your capital gains tax, the next step is filing the return itself. This distinction is important. You have to pay it and then you file it, and both happen, as we mentioned earlier, at different times. For filing your capital gains return, you file in the year after you make the gain. So using our example from earlier, if Cian sells his shares in June, he pays capital gains tax by December of that year, but he files his capital gains return by October 31st of the following year. So when you're filing your tax return, most investors will need to file a form called the CG1 form, and you can find that on revenue.ie or using the link that we've left in the description below. The only exception is if you're self-employed, and in this case you would fill out what we call a form 11, and that includes a capital gains section on that. Again, we'll have a link to that in the description below, or you can find it on revenue.ie. Once you've filled out your CG1 form, simply go onto revenue.ie, go to My Inquiries, and send your CG1 form to Revenue via message. If you wish, you can also print your CG1 form off and send it by mail.
But what if I made a loss on my investment? Regardless of whether you made a gain or a loss on your stocks or cryptos or investments, you still have to file a return and declare whether you made a gain or a loss.
Why? Because if you make a loss on your investment and you declare it, you can carry those losses forward to future years and deduct those losses from your future gains. Who doesn't like saving a bit of money? This part is important, so we're going to take an example to illustrate it further.
So, say for example, in a previous year, I made a loss on my investment of €2,000. If we go back to my example earlier, where I've made my gain of €6,000, I would be able to offset the loss in the previous year towards this year's gain, which would subsequently reduce my overall tax bill. So let's break down the maths. The overall gain is €6,000, so we can minus the €2,000 from the previous year. But then we also have our exemption, so we can take away the €1,270 exemption for the tax year, and this leaves us with €2,730 of a chargeable gain. From this number, we can then calculate the 33% capital gains tax that is due, which brings us to just over €900. It is important to note that you must offset your losses before you apply the exemption for the year.
That's a little bit too much though. Give us the simplified version.
All right, so in summary, here is the formula for calculating CGT. You take your net gain and loss, take away your losses from previous years, take away the losses from the current year, take away your €1,270 exemption, and then you get your chargeable gain or loss. And this is the number you then apply the 33% capital gains tax to.
So the big question on everyone's mind is, can you avoid paying CGT, Keno?
You absolutely can, but it's very illegal.
Joking aside though, there is one way you can at least reduce your overall CGT in addition to what we've already talked about. How do you do it? You do it with what we call a bed and breakfast sale. Keno, explain it for us.
So, the bed and breakfast sale is basically a tax reduction method. This is only really applicable if you weren't planning on using your €1,270 exemption. Basically, you can sell shares that you have made a gain on and avail of that exemption and then rebuy those shares back. So that means you can basically save on €1,270 of a gain. You can use some strategic maths here and make sure that it just equals the gain so you don't have to pay any capital gains tax over that.
So hopefully you can understand a little bit more about capital gains tax in Ireland, how to pay it, how to file it, and the other caveats around it. Might have been a lot to take in, so again, take it slow. We'll have all the details in the description, and as always, any questions at all, let us know in the comments below.
Thanks for watching the video. We hope you enjoyed, and we hope to see you in the next one.
Pay your capital gains tax.